What's going on, people? Back with a bang. This is the Money Management, back here to break down another stock for you guys today. So in this video today, we're going to be analyzing a stock, a company which you probably heard of before, even if you didn't know they had the stock, a company which has a pretty interesting future, and a company which also announced earnings recently. And unfortunately, right now, it seems just like any little bit of bad news can force the stock to be sold off heavily. But today we're going to talk about a specific stock. We're going to look at my thoughts. We're going to look at a few articles. We're going to look at the stock price right now, where it was a year ago, where it's been in recent times, all that kind of stuff. We're going to have a good look at this stock to find out if it could be a potential buy for you guys or not. But before we do that, there's one thing we need to do before we focus on any stocks today. Let's get the usual stuff out of the way. Please do drop a thumbs up on this video. These videos take time to research, to make, to edit, all that kind of stuff. Please do drop a thumbs up. It shows your appreciation. Also make sure to comment for the algorithm, comment for the stock, let me know your thoughts on the stock, let me know your thoughts on anything, comment, just say something in the comment section below. Also, if you're new around here, please do share these videos with your friends. It helps them get out to more people. I'm sure you came across my channel somehow, so please make sure that to get my channel across to other people as well. And lastly but not least, if you're new around here, please do hit the red button below. If you're not already subscribed to the channel, hit the notification bell so you don't miss when a video is posted. So in this video, we're going to be looking at Disney stock, ticker symbol DIS. So if you guys don't know what Disney is, well, you might have heard of Disney Plus, the streaming service, and if you haven't heard of that, you must have heard of Disneyland. I'm sure you've heard of Disneyland, Disney World. All of that is a part of Disney. Now that's probably rung a bell with you guys, so we're going to dive into the more important stuff now. So like I mentioned at the beginning of this video, it seems like any little bit of bad news this day can cause the stock to sell off heavily. And Disney recently announced earnings where they had a slight miss on subscribers and revenue, but overall the earnings was pretty decent compared to last year. Now this stock is sitting at just under $170, and just to put into context for you guys, it was sitting around just over $100 last summer and around $200 back in March. Now, like I mentioned, it's sitting at $170, just under $170 right now due to a recent sell-off after earnings. We're gonna have a look at a couple of things and breakdowns just to see what's happening in the near future. So I want to begin by looking at an article in the Motley Fool which says, is Disney a buy right now? And they give 4 main factors to back up the points in this article. So we see this article from the Motley Fool. It says, is Disney stock still a buy after missing subscriber estimates? So as I told you guys, Disney sold off a little bit after they announced earnings. So here we go. Walt Disney ended the fiscal second quarter with 103.6 million subscribers on its Disney Plus streaming service. While that's more than double the total reported in the year ago quarter, analysts expected Disney Plus to finish the quarter with 109 million subscribers. So they were expected to get 109 million subscribers and they've just missed that. Now, you might say, oh, it's only 6 million, but when it comes to expectations, as a business, you want to be meeting expectations. So you expect to get 109 million subscribers, they want you to hit at least 109 million subscribers, if not more than that. If you come in reporting 103 million subscribers, 104 million subscribers, well, you've obviously missed the target, which is never good for business. So the stock initially sold off sharply after the earnings report and is currently down 4.3% year to date. At the time of recording this video, it's actually down closer to 5% year to date. But as they state, here are 4 important points from the earnings call that suggest Disney is doing fine and could make the sell-off a good buying opportunity. So number 1, Disney is still on track to reach 230 million subscribers. So Disney has a long-term target of hitting 230 million subscribers. So that's more than double where they're at now. If you guys saw the recent Netflix report, Netflix also missed number of subscribers. And of course, you guys know how many people are out there watching Netflix, especially at this kind of period of time. So when you think about Disney missing number of subscribers, again, Netflix missed it as well. Netflix sold off heavily. It got to under $500, which is very rare. But it looks like long-term, Disney are still on target to reach their goal. Look beyond the near term, CEO Bob Chapek said, we are on track to achieve our guidance on 230 million to 260 million subscribers by the end of fiscal 2024. So that looks like positive news. Of course, I know he's the CEO, so he's going to always try and bring positive news. But realistically, I think these numbers do look good. I mean, I don't obviously know what's happening behind the scenes, but if you're looking at 230 to 260 million subscribers, that's way up. Again, more than 100% returns on what they have currently. Now, the second point, churn levels remaining low despite price increases. So last quarter, Disney actually implemented some price increases, and now the churn level was how many customers you're keeping, you're retaining, who are still going to pay for those services. So you might have Disney Plus or Netflix, and they might raise the price by, a couple dollars. I think Spotify actually raised their price, at least in England. I don't know about worldwide, but in England, it got raised by about £2 per user. And so when you have the churn rate, it's about how many of those users are now leaving because of the price increase. Disney's price increase didn't really affect their churn rate, which is a positive sign again. So Disney expects subscriber growth to be stronger once content production resumes at full strength. The CEO said the anticipation of Marvel's newest series, Loki, which debuts on June 9, has been through the roof. Remember that Disney has gained more than 100 million subs without tapping the deep pipeline of content from Star Wars and Marvel that management unveiled at its December Investor Day presentation. As the company adds more content from these powerhouse franchises, subscriber numbers should add up. So it looks like Disney have some interesting and exciting content coming. For those of you who are Marvel fans out there, that's good news for you. I know a lot of people have asked me, oh, have you heard of Loki? Are you looking forward to Loki? I honestly don't know anything about Loki, but it looks like people are excited for Loki when it comes and it drops June 9th. So, I mean, for those of you who are, again, are Marvel fans, have a look out for that. Also, for the Star Wars fans, it looks like there's a lot of interesting, exciting content to anticipate. So that's going to be interesting to see as well. 3. Disney Plus has yet to benefit from recent price increases. Disney's average revenue per user fell 29% to $3.99 during the quarter. That is certainly a stark contrast compared to Netflix's 6% year-over-year increase in the last quarter. But there's more to the story here. The decline in average revenue per user was due to the launch of Disney Plus Hotstar in India, which produces a lower revenue per user than Disney Plus in other markets. Excluding Hotstar, Disney Plus average revenue per user would have been virtually unchanged at $5.61. As we move through the remainder of the year, we should start to see the benefit of Disney Plus's average revenue per user from price increases we've taken around the world. So the average revenue per user dropped almost 30% as you guys read, but it was due to Disney Plus Hotstar, which they launched in India. So taking that out of the equation, yes, it's a big part of the equation, but taking that out of the equation, the actual average revenue per user would not have decreased that much. And number 4, per capita spending is up at theme parks. Now, this is the part you guys know about. The amount of people going to Disneyland, how much they're spending. Is that raising? Is it dropping? What's going on with it? Right now, it's increasing. And with Disney parks set to continue opening, that's good news. So the per capita spending is up. Again, some positive signs. Of course, theme parks are still an important piece of Disney's business, generating $26 billion in revenue in fiscal 2019. Revenue from Disney parks, experiences and products dropped 44% year over year in the quarter, but that's an improvement from the previous quarter's 53% decline. So Disneyland Resorts opened April 30th, and it looks like their management is pretty happy with the numbers so far. People are obviously excited to go back out to Disneyland. I know a couple of people who have been to Disneyland since it opened a few weeks ago, and the per capita spending is up. So people are still spending their money, even though it's COVID times, even though it's pandemic. People are going to Disneyland, still having fun, and Disneyland is still bringing in a substantial amount of revenue from their parks. So as you guys know, Disney is one of the biggest franchises in the world. And it's good to see that no matter what the stock price does, at least right now, Disney Plus is looking to do well, expand, and Disneyland parks are still going strong. Yes, they were closed for a while. Yes, it's been a tough period of time, but people are still watching Disney. As I mentioned before, people are still going to their parks, as you guys can see in the articles. So from the business side of things, the revenue side of things are looking good on the whole for the company. So is this really a buying opportunity right now? Well, for me personally, I do think it is. Like I mentioned, last summer, which was really, the worst times during COVID, Disney stock was sitting at just over $100. In comparison to March this year, when many stocks were overvalued, many stocks shot up in the price, where it was sitting at $200. Now it's sitting just below 170. I think we're around a good buying opportunity. To be honest, for me to load up on this stock, I would need to see it to drop maybe to 160, maybe just under 160 for it to be at, a solid buying opportunity. And when I say solid buying opportunity, I'm talking about I'll load up on shares. Right now, under 170, I still think you can't go wrong. Just like with other stocks I mentioned, you have that period of time, that kind of range where you're like, yeah, I would buy the stock here. But you also have a next range where you're like, I would definitely load up on the shares at this price. And right now, Disney's not really at the latter stage. It's more like, yeah, I can look at it, keep watching it. It's kind of a buying opportunity. I wouldn't mind buying shares for this price. So today it was down again. It was just sitting at just under $170. It might not be a stock that you wait for a reversal to purchase, but it's more one of those stocks I would personally watch to see how low it could go. So I'm also kind of wondering, what exactly is happening with Disney? There was another article I read where they talked about they're letting people go there without masks now, which is interesting. Are they trying to attract more people? But at the same time, are they pushing people away? So the article Market Watch says, Walt Disney World drops mask requirements for visitors who are outdoors. Other theme parks, including Universal Orlando Resort, changed COVID-19 policies regarding face masks after the CDC issued new guidance for fully vaccinated people. Now, if you actually read the article itself, it doesn't specify that it's for fully vaccinated people. It kind of just glosses over the fact that if you're outside, you don't need to wear a mask. So that's kind of interesting. Again, I'm not sure if that's pushing people away, if that's attracting people. That is kind of one factor which would interest me, knowing the numbers about, if people are more interested in going to Disney because of that, or they're being pushed further away from Disney. But like I stated, it would be nice to see the impact that would have on people going to Disney, people staying away from Disney, etc. Because I know I'm not their target demographic. I will visit Disneyland once in a while, but it's more for those families, more for those kids maybe, you know, the odd guy or girl who really loves Disney like that. That's not really me. You know, I've been multiple times. I did enjoy it, but it's not, you know, something I would do yearly, let's say. You know, I know people that would do this monthly if they had the choice. You know, go see Mickey Mouse and his friends, all that kind of stuff. That's not really me, but I know that their business model, how it is, they're bound to continue attracting people. But like I mentioned, this idea of letting people walk around without masks, is that in an attempt to get more people to come and visit Disney? Or are they actually pushing people away? I mean, I'm not sure. You know, it depends who you are and your thoughts on COVID, wearing masks. I know people have very different opinions. So that's also an interesting thing I looked at. But on the other hand, the people that aren't going to Disney right now, what are they doing? Are they all rushing to AMC theaters? Should we be investing in AMC stock? I'm not sure. But I think that right now, for me personally, Disney's a buy, like I mentioned, but I'm still going to see what the stock price does over the next few days, possibly weeks. So my final thoughts on Disney. Long term, I think it's a great stock. I think it's a great company. I'm aware of their global brand. I'm aware of how big their franchise is. I'm aware of what they're capable of. I know how extensive their Disney Plus will eventually be. We all know about the theme parks. I don't need to talk about that. The brand is valuable. They've got original content. They've got a massive user base. Like I mentioned, those people will go to Disney constantly. Let's be honest. In the mouse, I trust. In Mickey and his friends, I trust. In Donald and his friends, I trust. I think, you know, long term, this stock will be a lot higher levels than it is right now. I do think it's completely oversold the way it's been selling off recently. You have to, you know, kind of do your own further research if you decide you would like to buy the stock. But those are my thoughts, those are my opinions. You read the article on Motley Fool, you read the article on Yahoo Finance, and you can kind of deduce your own opinions and ideas from those. So overall, I hope you guys did enjoy this breakdown on Disney. I think right now you just got to kind of wait, let it bleed out continuously. If you want to buy call options on it, you can do that. But for me, it would be a long-term buy and hold. It's not one of the stocks that I would trade options on per se. Also, please make sure you guys check out the stock option starter pack. Since we're speaking of options, we have many different other links in the description as well. We have a link to the Discord, which is still free for a limited period of time. We also have links to cryptocurrencies through Coinbase and KuCoin, and also a link to Robinhood, so you can get a free stock there. Also, let me know your thoughts in the comment section on Disney stock or any other stocks you'd like me to break down. As always, I'm open to looking into different stocks. This was a stock I personally picked because I like Disney and I saw how beat up it was. But of course, like I said, let me know about any other stocks you'd like me to break down for the future. Thank you guys so much for watching this video. Have a great day. I got money making. You got money making. See you guys next time for another video. Peace.
Game over.